Hey everyone, Snowflake reported its latest quarterly earnings release, and that sent the stock price down over 20% in the aftermarket hours following the release of that statement. So in this video, I'm going to review its latest quarterly results and update my buy recommendation for Snowflake stock. Coming into this quarterly update, remember I did not have Snowflake stock rated as a buy. I told investors while the company was excellent, the valuation was too expensive to buy at the moment. So let's see if this more than 20% decrease changes that recommendation and makes it a buying opportunity on the dip. So let's dig into the details.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
All right, starting with the income statement, one thing I noticed here was that total expenses increased more than revenue. You notice here revenue increased year over year in the quarter that ended on January 31st. Revenue increased to 774.7 million, up from 589 million in the latest quarter. But total operating expenses increased to 808 million from 623 million, and the gross profit only increased by 140 million because the cost of revenue increased to 241 million. The end result was that the operating loss actually increased, right? You see there to 275.5 million, up from 239.7 million. So even though the company increased its revenue, it just made the losses on the bottom line worse. So it went backwards. I don't like to see that, right? Especially from a company like Snowflake that had been doing such an excellent job going in the opposite direction. Revenue was growing, free cash flow margins, operating cash flow margins, profitability was improving. Everything was going in the right direction. And now all of a sudden we see a turnaround here where the leverage in terms of the operating leverage is missing. And we're going to see more of that when we look at the company's guidance for the fiscal year 2025. Okay. Before we go on to look at more numbers, another bad sign, well, it's not necessarily bad, but typically a change of management is not good news. And that's what we had here with Snowflake as well, as the CEO mentioned that he's retiring, is being replaced by a new CEO. Okay, so change of management wasn't really forecasted, and so it kind of caught investors a little bit off guard here. So that's contributing as well to the stock price decrease here for Snowflake in the after hours. Additionally, so I mentioned when we look at the guidance here, we're not going to be thrilled about the results. So looking at fiscal year 2025 guidance of 3.25 billion, that would be up only 22% year over year if the company indeed hits that target. And you could see the product revenue growth over the last several years increased 106%, 70%, 38%, and now it's expected to increase only 22%. But what makes this worse is the inflection point here in terms of the non-GAAP operating margin. You notice here the improvement from negative 3% to 5% to 8%, right? Consecutive improvements in non-GAAP operating profitability. But now management says that's the end of that. For 2025, the non-GAAP operating margin is going to go backwards. So we're done with that growth here in terms of leverage, revenue growing, and it's improving our non-GAAP margin. Now with revenue growth, our margin's going to decrease. That's not great news. And it's especially not great news when you're looking at companies trading at such expensive valuations. I often say when I'm paying these premium prices, I need everything to be perfect. I need everything to be moving in the right direction and doing so rapidly, right? We're going to see Snowflake here. In fact, let me just show you. Snowflake is trading at a price to free cash flow of 135 and a forward price to earnings of 118. It's really expensive. It's really expensive. And so when you're trading at these kinds of valuations, things like this have a big impact. Things like a inflection in terms of the direction in your profit margin is a big deal. It certainly stands out to me, and it makes me even less willing to pay this kind of premium valuation. To make matters worse, Here's another critical metric I've been paying close attention to with Snowflake, and it's the retention rate, net revenue retention rate. A number above 100% means that existing companies are spending more with you this year than they did last year. It signals that they're getting good value from your service, because otherwise they wouldn't spend more this year than they did last year, right? They would decrease their spending with you if they saw they weren't getting sufficient value. So you want to see this number above 100%, and preferably you'd like to see this number rising or at least stable. For Snowflake, we're seeing a number above 100%, but we're seeing a troubling trend here. Look at this. For 1, 2, 3, 4, 5, 6, 7, 8 quarters in a row, this net revenue retention rate is declining from a peak of 178% all the way down to 131%. Look at this trend the company was exhibiting all the way up to the fourth quarter of 2022. The net revenue retention rate was above 100% and rising from 166 to 169, 173, 178. That's the kind of performance I like to see from a company I'm paying these levels of premium valuations for. If I was seeing more of that, I would be more willing to pay these premium valuations, not in this declining level here. So another signal here from Snowflake where I'm hesitant to pay these premium valuations, and why I've been informing investors not to buy, because the valuation is very expensive and the stock, the business is really, really good, but it's not perfect. And if I'm paying this level of a price, I want it to be perfect. I want it to be perfect. And lastly, the net promoter score down to 67. Now, while this is an excellent net promoter score, this used to be up at 71. So this net promoter score is also declining here. I know I'm being a little bit picky here with Snowflake, but it's because the stock is so expensive that I'm looking at things that are not great, things that are standing out as flaws, because at premium valuations, mostly you're going to see very, very good characteristics in a business, right? That's why it's trading at a premium valuation, because most aspects of the business are excellent. So it's hard to find those aspects that are not great. And it takes more detective work to find those not great aspects. And that's what I look for when I'm evaluating a company that's so expensive. I want to see, is there anything that is a flaw? If I don't find anything, then I'm more inclined to say, okay, you know what, this stock is extremely expensive, but it's worth it because the business is fabulous. There are no flaws. It's growing exponentially. Everything looks great. And it's a good time to get in right now, because yes, the stock might be expensive today, but it's probably going to be a better value 2 years from now because it's going to grow into that valuation. I'm not so sure about that with Snowflake based on the characteristics and the things I'm seeing with Snowflake. I don't think this premium valuation is worthwhile. So after evaluating Snowflake's latest quarterly results, I'm keeping Snowflake stock rated as a hold. The company is excellent. It's in a great position to benefit from the rising effectiveness of AI. Data is the foundation that artificial intelligence is built on. So Snowflake is in a great position to benefit from that. But its guidance for 2025 does not look great. It's demonstrating that it's not going to grow with operating leverage in terms of its operating profit margins going to decline. Revenue growth rate is slowing. So all of these characteristics makes me not interested in paying this triple-digit valuation premium for Snowflake stock. I'll wait and see if the valuation decreases more, or if the company demonstrates a better quarter next quarter, updates the guidance and increases the guidance and says, you know what, that guidance was too pessimistic, we think it's going to be better. I'll be sure to update this recommendation. But for now, I would say no, this dip is not a buying opportunity for Snowflake stock. Before I let you go, let me tell you about the greatest deal on YouTube. With just a click of a button, you can get free financial analysis from a professor with decades of investing experience. So what are you waiting for? Hit that subscribe button, and I'll see you again soon.